How do I buy a home with interest rates that are rising? There's no denying that higher interest rates make home ownership less affordable. And you're probably wondering, what can I actually do? Fortunately, there is plenty of ways to get creative on dealing with higher interest rates. And in today's video, I'm going to go over 3 things that you can do to increase the chances of you getting a lower interest rate. The first thing you can do to give yourself the best chance of getting a lower interest rate is looking at your debt to income ratio, which is what banks and mortgage lenders look at when they're borrowing money to you. So, you should be looking at, okay, how much debt do I have out there? Is there a way for me to decrease that amount of debt? Because again, it's going to come into play when you apply for a loan, and lenders are going to look at your debt to income ratio, and based off that, you're more than likely going to get a lower interest rate. The second thing I want to go over today is locking in your interest rate. If your mortgage lender or your banking institute is offering you an opportunity to lock in your interest rate, I would definitely take advantage of that. That means you know what interest rate you're going to get, and making sure that you can lock it in will guarantee you getting the right interest rate, because as you may be aware or not aware, interest rates are only locked in when we actually have an agreement signed and under contract. So definitely consider locking in your interest rate if you can. You only want to do this if you're really serious about buying, because there is a certain amount of time that you can lock in the interest rate until. The final point I want to make today is discount points. Discount points are fees that you can pay to lower your interest rate. And for example, 1% discount point would be, if I give you an example, on a $200,000 loan, a 1% discount point would be $2,000, and that would be what you would pay to bring down the interest rate. And in some cases, depending on the situation, that discount point that you paid for could be that tax deductible. Obviously, you want to check with your CPA, but you do have options for buying interest rates down that you may be not aware of. And what I would do is I'd just check with your local mortgage lender or the person that you bank with. If you don't have somebody, we can help recommend somebody that we use. But those are just 3 things that you can do to combat higher interest rates. And hope you found this video useful, and thank you again for watching. If we can help you with anything at all, feel free to reach out. Thank you for watching.